The crypto market is pulsing with fresh energy as major players, both old and new, take bold steps in an increasingly legitimized ecosystem. Coinbase's looming entry into the S&P 500 on May 19th is a historic moment, one marred only slightly by a recent customer data breach. The platform is now dangling a $20 million bounty to hunt the culprits, highlighting both its scale and the growing security stakes. Meanwhile, institutional capital isn't flinching. Bitcoin continues to see sustained inflows, and even with a 5% pullback across Dogecoin, Cardano, and Solana, capital rotation suggests a deeper reallocation, not retreat. Under the hood, infrastructure is evolving rapidly. JPMorgan's Connexus just completed its first tokenized treasury trade on Ondo Chain's testnet, a landmark move that hints at what the next wave of institutional rails could look like. Layer 0 is making a quiet power play with a dominant 70% share in the stablecoin bridging sector, and integrations with giants like PayPal show it's not just theoretical. Telegram's takedown of the $27 billion Hawang illicit marketplace also signals a crackdown era, perhaps paving the way for cleaner pipes and smoother compliance paths for legitimate cross-border rails. The crypto market is heating up as Bitcoin consolidates above the critical psychological threshold of $100,000, brushing up against a formidable $120 million sell wall at $105,000. Despite this resistance, bulls remain firmly in control, fueled in part by a broader surge in institutional confidence. Ethereum whales are quietly accumulating, typically a strong signal of longer-term bullish conviction. Meanwhile, Solana is dominating chain activity with a staggering 87% of total volume and over $3 billion in protocol revenue, reflecting renewed user engagement and capital efficiency. And yes, Eric Trump calling Bitcoin digital gold may be a headline grabber, but it underscores a cultural shift as even legacy-adjacent voices join the crypto chorus. On the infrastructure front, Chainlink continues its quiet transformation from a DeFi tool into institutional middleware. Its latest milestone, powering JPMorgan's first public blockchain transaction via Link and becoming the official oracle for TRON's $5.5 billion TVL ecosystem. Even BlackRock has tapped Chainlink's feeds to anchor its tokenized fund, cementing the project's role at the center of real-world asset tokenization. At the same time, Metamask's imminent native integration of Solana could open the floodgates for normie onboarding, aligning user experience with high-throughput, low-fee infrastructure, just in time for the next wave of retail adoption. Beneath the surface, structural shifts are becoming harder to ignore. Positive inflows are quietly returning after a prolonged risk-off period, and the UAE is emerging as a heavyweight crypto hub, drawing talent, capital, and regulatory clarity in equal measure. FTX's long-awaited $5 billion creditor repayment on May 30th is set to reduce headline risk and unlock sideline liquidity. Coinbase, however, remains in regulatory crosshairs. The SEC is reportedly probing discrepancies in user data, compounding concerns after a recent data breach. Still, the net narrative tilts bullish. An accelerating feedback loop of capital inflow, institutional adoption, and maturing infrastructure is forming what looks increasingly like the backbone of the next cycle.